Okay, good morning, traders. Wall Street is open, and I'm doing a watch list for my 10 a.m. till 12 p.m. trading window. And we're starting with silver. I'm using an indicator here to give me an overall bias for the momentum that's in the market. And as we can see, we've got mostly everything green, which is bullish. The only thing that is opposing the bullish bias is the fact that, let's go to a 15-minute chart where it's more legible, is the fact that we've come up into yesterday's highs, yesterday being an outside day, which took the lows of Friday before rallying up to the highs and breaking out of last week's highs. So the market's in breakout on the weekly chart, having put in a peak formation low at the start of the week, Monday. So the thesis is moving on up. And we've got the previous month high as an ultimate target on the upside, not for today, but perhaps later this week. No idea if it will continue going up, if it does go up. But the point being is that we've taken out yesterday's highs and we've come back inside. So that there in itself is actually a bearish development in what is otherwise a bullish overall multi-time frame outlook. So we're trying to trade with the trend, but that move there is against the trend. And for me, it's just not high enough. So if we come back to, let's say, an 8-hour chart, try and clear it up a bit. Okay, as we can see on an 8-hour chart, we can see that the monthly momentum here is actually bearish. So we're not high up enough in a bullish trend. This is only really a potentially a temporary bullish trend. So we're not high up enough. If the market was more, say, doing this on a monthly chart and inside the weekly chart as well, and the daily chart, and let's say we were 3 months and breakouts long, 3 weeks, sorry, and breakouts long, then I'd be inclined to be looking for a reversal. And because of the fake out high into the daily, say 3 days long, a fake out high, then that I could be looking for a scalp into the trend, a counter trend. But because we're in accumulation, breaking out of accumulation, and this is just potentially the start of it, I'm not inclined to trade against it when the explosiveness is potentially starting to occur to the upside. So that's my point. My point is that I'm looking to trade with the trend. So with this particular instrument, I'm only going to be interested in it if we can get back above yesterday's highs. So if we can get back above yesterday's highs, then I'm looking for a breakout, pullback, continuation trade setup in line with the bullish trend that is seen due to the breakout on the weekly chart, breaking last week's highs. And given that on the month, this month, December, broke below November's lows, okay, in that move there, but it's come back up into the lows and broken back inside. So we're back inside of November's range. So that's bullish. There's November's range, and as you can see, we're back inside of it. So it was a bearish month, but because we've moved back inside of it, this volume down here is volume that's trapped, trying to go short, but the bulls have piled in. So the bulls are taking control. back inside of November's range, back above last week's highs. And if we can get back above Monday's opening range highs, so if we go to a 15-minute chart and just monitor to see how the price is behaving, then if we get back above, pull back and hold with bullish candle formations, then I'll be inclined to take the long, targeting back up into stops potentially above that week there, week commencing whatever week that was, 16th of December, mid-December. It's a bearish week. Therefore, there are shorts, and they'll be scrambling to get out of their position at break even if they haven't already taken their profits, as the price moves up and puts heat on them. So that would be a liquidity hunt trade opportunity in line with the trend, the near-term trend. So that's my thesis on silver. If it doesn't break yesterday's highs, then I'm just not interested at all, because it could be a scalp only to find that it moves back up. So I'm only looking to take longs above yesterday's highs. So what I'll do is I'll put a alarm on there. If we get back above that high, so we've got the data coming out at 10 o'clock, so could have some volatility, but nevertheless we'll put an alarm on that. That's not an alarm, bear with me. And crossing up. Okay, so we've got our alarm set. Get rid of these old alarms. And we move over to gold. So we're bullish on silver potentially. Okay, gold. Right, gold is fully green, as you can see. So all the time frames are aligned. We've broken out of yesterday's highs, peak formation low at the start of the week. However, we're very close to previous week's highs. These could easily act as resistance. So I don't want to trade into the previous week high unless we get above it. If we get above the previous week high, then I'll be looking for the breakout continuation trade. So that one was nice and simple. Okay, oil. Oil. We've got API weekly crude oil stocks at 4:30 this afternoon, so quite a way off. So we've got a situation where we've got resistance at last week's highs. We've got a fake out low on the daily charts that's bullish. Peak formation high. Not sure I'm interested in oil because we've got this peak formation high, peak formation low. We've got resistance at last week's highs. I'd want to get above the previous day high if I'm going to go long. So it's either long above the previous day high or short below yesterday's low. Otherwise, we're trapped in between resistance and support, and I'm not interested. So I'm neutral on this. All right, we'll leave it there for the commodities, and we'll look at the indices in a second.